Are there undervalued software stocks? Today we'll hear about 3 names that investor Zac Hartley is watching right now that may have been overlooked by the AI boom. So let's get started. This is Ticker Take.
John, the AI boom has been great for tech stocks, but not all tech stocks.
No, one group is really interesting to look at, software, because on the one hand, you've got businesses here that investors generally are very profitable, but there's been a worry about AI disruption potentially hurting their businesses.
It's a theme that investor Zac Hartley has been watching very closely, and we wanted to get his take.
Zac is a really smart entrepreneur and investor, and you may have seen his social media videos or his presence on YouTube. So we talked to him about some potentially undervalued software stocks.
All right, let's hear from Zac now.
Zac Hartley, thanks so much for joining us here on Ticker Take. It's great to see you.
Thanks for having me, John. I appreciate it.
Well, one of the big themes this year has been AI this and AI that and big valuations tied to the AI boom. You've been watching it like everybody. What's your assessment of where we're at this point?
Look, AI is real. AI is here to stay. AI is going to change the world. Where are we at with regards to the advent of AI and the trend? We're not at the beginning of the trend. I think we're closer to the end than we are at the beginning. The reason I say that is because some of the valuations that we're seeing right now and some of the things that we're seeing in the market with some of these deals, they're extremely expensive. They're extremely inflated, in my opinion. And I don't think that we're going to see the growth that we saw 2 years ago to today. I don't think that's going to continue for the next 2 years. I think we're at the point where we're getting to the end of the hype, and now we need to see some profitability, some sustainability, and some real action in the industry in the form of products that are going to solve problems. And so I think that's where we're at right now.
So that's definitely something for investors to be mindful of. But at the same time, because that is your view, you are sensing an opportunity in another pocket of tech through software. Tell us what you're seeing there.
Yeah, look, I think what we're seeing in the market right now is AI has sucked up all of the attention. It has sucked up a lot of the money. And what that has left is a lot of these amazing companies that have seen tremendous growth over the last few years that are now becoming profitable, and the profit is increasing exponentially with every quarter. And so I think there are a lot of underloved companies, undervalued companies that are now starting to hit their stride, but they aren't AI first companies. And because of that, they're not getting the attention they deserve, and they're undervalued.
Okay, we're going to talk about a few coming up. First, just in terms of you as an investor, there's almost 2 strains. There's the set it and forget it long-term investor, but you do also do swing trading, which can be shorter term in nature. And that's where this opportunity falls into sort of your investing framework. Can you tell us a little bit more about how you think about investing over the short term?
Yeah, when it comes to investing, it's about building a rock solid portfolio that you know is going to take you where you want to be in the long term. And that's what I've done with basically my long-term portfolio. I'm buying long-term ETFs, I'm buying great companies, and I'm buying with them with the perspective of buy and hold basically forever. For an avid investor and business guy like me, it doesn't always check the box. And I do think there are better opportunities in the market that I do want to try and take advantage of. And so when I can identify what is happening in the market, when I can identify a trend, and when I can understand the supply and demand behind that trend, that's when I'm looking for individual opportunities to buy and sell with a shorter time horizon, usually in that, let's call it 1 to 6 month time range.
1 to 6 months. And then for anybody who's curious about doing the same thing, or maybe they've done the same thing themselves and are thinking about, when do I buy, when do I sell, all that goes into maybe swing trading. What are some of the things you would say to investors that they should think about?
Well, I'll walk you through kind of what I do real quick. And it's really simple. It's looking at the market, looking at the news, and looking at what you're interested in and trying to understand it. Trying to understand where is the supply decreasing, where is the demand increasing, and what is that going to do to price? Most of the time, this comes through in industries. We've been through cycles where electric vehicles were the hot industry. We've been through cycles where cannabis was the hot industry. Over the last 2 years, it's been AI. And so my philosophy is identify that trend, try and figure out what companies are going to do the best because of that trend, what companies are going to do the worst because of that trend, use fundamental analysis to identify those companies, and then I use technical analysis to identify my buy and sell and entry points and exit points. when I'm going through that process, what it comes down to is making sure you understand what's actually happening in the market, keeping an open mind so that you don't have confirmation bias, and then managing your risk with appropriate position sizing and stop losses. So that, if you can nail that down, that's going to put you on the right path.
All right, with all that said, let's get to Zac's 3 stocks now. But first, a friendly reminder.
This is not financial advice.
In alphabetical order, stock number 1, Adobe.
All right, Zac, most people know the name Adobe. They might not know the particulars of the business, but let's start there. Like, what are you buying if you're investing in a company like Adobe?
Adobe is the gold standard when it comes to tools for content creation. Whether you're a professional or whether you're an amateur or you're doing this at home, Adobe provides you the software tools to edit your photos, to edit your videos, and to make your media presence professional. And they're a company that's been around for a long time. They're extremely profitable and they have extremely steady growth. And now in the age of AI, I think they're slightly overlooked.
So let's get into that part, because in terms of the stock performance, when you look on average at what's been going on with Adobe, certainly it would speak to the idea of being overlooked. Hasn't been overlooked over the long term,
Yeah.
and you do still see a majority of analysts on Wall Street who support the company. But what do you think went wrong in terms of winning over investors for most of 2025?
So here's what's happened is in the last year, we've had all of these tools come out that can use AI for content creation or making a video or making a photo. And what's starting to happen right now is investors got scared. They thought this was going to disrupt Adobe and the industry. But what's actually happening now is people are getting really sick of AI slop content that they don't know if it's real. And so this is a trend. This is a fad. It's going to fade away. People want to watch real people. They want to watch real things. And Adobe creates the software where that happens. Now, where the real opportunity here is Adobe already has that infrastructure. They have the base and they have the foundation that people are already using. They are in the best position to take advantage of the recent tools that have come out for AI generation and video editing and content. Instead of creating an entire video that's completely AI generated, creators and professionals are going to use these new tools within Adobe to edit out something from the background or make this scene look better so they don't have to go retake it. The advancements in AI aren't going to disrupt Adobe. They're going to make it better. Investors have missed that, and this recent stock pullback is an opportunity for us.
And it's one thing to talk about sort of the inner workings of the business as an opportunity, but when you look at, on average, what Wall Street expects in terms of profitability, even in the short term, just looking into next year, they would not be on average surprised to see double-digit percentage profit growth. So as you look at the sort of the profit potential for the business itself, is that a motivating factor for you in giving Adobe a closer look?
It's massive. This is a company that's grown by nearly double digits for years and years now, and it's going to continue. And so when we see a massive pullback like what we've seen in the stock market, in the stock price, I think that's just a huge opportunity for us in a company that's already profitable, that can use AI to its advantage and already has a great outlook, but the stock has been beat down. In my books, that's a buy.
Stock number 2, LegalZoom.
All right. So Zac, like Adobe, LegalZoom has a name people are probably familiar with. Maybe they haven't thought as much about what the business actually does. Walk us through it.
Yeah, LegalZoom provides online legal services at the base level. So if you want to incorporate your business, or you need a demand letter, or you need something that is not a giant merger and acquisition of your business, LegalZoom is going to be able to help you. And they are trying to disrupt the legal industry, which in my mind is a relic of the past and is ready for disruption.
Now, compared to an Adobe, I wouldn't say investors have been running away from LegalZoom's stock, but I think given reasonable performance, analysts aren't giving a high level of conviction about the stock's ability to keep going. It's actually a minority of analysts on Wall Street who are recommending the shares right now. So does that perhaps make it overlooked in your opinion?
Well, I think LegalZoom is one of those companies that has really fallen under the radar. They haven't had a lot of AI announcements and a lot of AI progress in the recent months, and that has basically taken them out of the spotlight. But what I think their big opportunity is the ability to completely use AI to disrupt this old business model that is built on partners and revenue share and abusing low-level analysts for extremely high prices, and it's the consumer that is paying for that. And so when LegalZoom comes through, they disrupt this model and they give consumers a better option with AI embedded into it so that now their tech stack can improve and their array of capabilities can widen to service more businesses. I think over the next few years, we're going to see them continuously disrupt this industry and use AI to their advantage. Now, analysts not being on the same side as them, that's completely okay. The stock IPO'd fairly high and it has fallen ever since. It's basically been consolidating for 2 or 3 years. So we're trying to break out of that right now. It's had a decent run so far this year, and I think that's going to continue.
And it always helps when you can look at the profit story and see progress.
Yeah.
And like Adobe, it does look, when you look at the analyst expectations, that this is a company that's expected to see similarly double-digit percentage growth going into next year.
Exactly. This is one of those software companies that they weren't profitable in the beginning. They were continuously investing. They were trying to grow their revenue and grow their consumer base. But now in the last few years, we've got a variety of these companies that are now starting to become profitable. The revenue is still increasing steadily. The expectations are going in the right direction, but they haven't been in the spotlight on Wall Street. And I think that's giving us a buying opportunity in undervalued software companies, specifically that are trading at very low price to sales ratios compared to historically. And I think in the next few years, as AI attention and improvements transition from the companies that are building it to the companies that use it, these are the kind of companies that are going to prosper best because they have the infrastructure to take advantage of it, and they don't have to build it from scratch. They have to add in the AI innovations into their existing product and offer it to their existing customers.
And stock number 3, TOST.
All right, Zach, we've had sort of this theme of companies whose names are very familiar. We might not know the ins and outs of the business, so walk us through the TOST story.
So this one's actually one of my favorites. They've made some amazing progress recently. What they do is they're a POS system for restaurants particularly. So when
Point of sale?
Point of sale.
Okay.
Yes, point of sale. So when you go pay for your credit card, pay with your credit card at a coffee shop, you are tapping a TOST terminal and you are using their processing and their services. And so they're not super widespread. They're a small young company, but they're growing extremely fast. They just crossed into profitability. And it's really, really cool because now almost every day I'm running into a TOST terminal. So it's a nice sight to see.
Seeing it out there in the world. What I see when I look at the analysts and I know the analysts aren't the be all and end all, they're generally supportive of TOST, but I wouldn't say overwhelmingly so. Does that sort of create this overlooked sort of case that you're talking about?
Yeah, what they're missing here and what they don't understand is from the business owner's perspective, when you incorporate a system like this and you put a POS system into multiple businesses, it is sticky. You are paying them a monthly fee for it. TOST is making monthly reoccurring revenue, and it is very sticky. It's like entering into the Apple ecosystem. And so what I like about TOST is their customers are staying, their customers are spending more every single month, and their customers are growing extremely fast, putting the company into a position where they are now profitable. And I think what we're seeing is they're not AI first. They're not an AI company, which is basically taking them out of the attention of Wall Street. But if this was 3 years ago or 4 years ago before the AI boom, and there was a software company growing this quickly that was now profitable, they would not be trading at a 3 times price to sales ratio, which is roughly where TOST is at right now.
And just to cap things off, compared to the other two companies we talked about, the expected profit growth is much more dramatic with TOST. Now, mind you, we're talking about, percentages are always bigger when it's off a low base, but when those percentages are growing at a sizable rate, generally that's kind of what gets investors excited too.
It is. And when you look at the recent press releases from the company, they're landing bigger and bigger customers with more and more locations every single quarter. And so I expect the revenue to continue growing exponentially. I expect the profit to continue growing exponentially. And they actually make an amazing product for the retailer, for the consumer. And so I think altogether, they check the boxes. They're the software company that's growing quickly. They're now profitable. They have a great management team. They have good insider ownership. And they have a product that solves a problem in a marketplace, and they're helping the retailer or the restaurant make more money as well. And so they've got a sticky business model, they've got reoccurring revenue, and they check my boxes for a trade.
Really interesting perspective. Zac Hartley, thanks for joining us.
Thanks so much, John.
All right. Our thanks to Zac Hartley. If you want to learn more about Zac, we put some information in the description where we also included a link to his amazing YouTube channel.
Absolutely. And speaking of the description, you can also find other ways to connect with us, from our free investing newsletter to the podcast edition of Ticker Take.
And don't forget to subscribe so you don't miss our next investing video.
See you next time.
So you don't miss our next investing video.
You seem to be laughing. See you next time.
You said something weird.
What did I say?
You went the show.
All right. Bye. You're still laughing.